Yeah, I think that it's a funny term, unicorn, to me. I always think it's a mythical animal, so I never quite would want my business to be called after a mythical animal.
Unicorn. That's the term the tech industry uses to define companies worth over $1 billion. But they're becoming less and less mythical, with 13 companies reaching that holy threshold over the past 12 months in Europe alone. CNBC's new series aims to find out more about them. In this episode, we visit Just Eat to find out how it started, grew to be the mammoth it is today, and where it's going next.
Just Eat actually started in a basement in Denmark with a couple of friends. So when I met Jesper, believe it, they went from a basement to a farm was the evolution. So I mean, full credit to them, they're brilliant entrepreneurs, right? And the business would never have survived the dot-com bubble that burst in 2001 if they hadn't bootstrapped it.
The food delivery service grew, and 4 years after launching, finally managed to break even, prompting the founders to think about expanding abroad. They started with the UK.
The UK is actually the second biggest global market in the world for takeaway after the United States. 1/3 of all European takeaway is consumed here in the UK. So it made a ton of sense. We operate in 15 markets around the world. You should think of us in sort of Western European markets, as well as Canada in North America, Brazil and Mexico in Latin America, and now of course Australia and New Zealand, which we acquired in May of 2015.
In April 2014, Just Eat left the private world behind by listing on the London Stock Exchange, valuing the company at a staggering $2.44 billion. So, what's next for Just Eat?
So in terms of market evolution, the way we think about it, we have a very clearly defined strategy, which is to focus on clear markets leaders. So we'd only enter new markets now by acquiring clear market leaders within those markets. We think we're in the best markets and all the markets we need to be in right now. So there's no need for Just Eat to enter new markets, but of course, if we saw the right market, like we did in Australia, then we could potentially acquire business in those positions.
However, competition appears to be heating up.
Just Eat's primarily a UK-based company, although it's a European business, and in Europe it has some really strong competitors, the biggest being Delivery Hero, which is a group that was founded or funded by the Rocket Internet brothers, and that's giving Just Eat a run for the money. And there's an argument as to which one's the better company. Delivery Hero is now worth about $3 billion US. Just Eat is worth about 2.8 billion pounds. So it's a little bit bigger, but Delivery Hero is growing faster in a lot of places outside of the UK. So Just Eat went into Australia and they bought a company that paid almost twice the price of everybody else for that company. It was called Menulog. It was a very expensive acquisition. I think everyone else kind of scratched their heads on that one. I know Delivery Hero walked away from it. So I think they have to figure out how to expand internationally and build up that kind of market penetration.
But Just Eat is not worried about competition.
Competition is not new, right? We've had competition since day one in this business. But the way we think about it is this: we focus on our strategy, we focus on our execution plans, we focus on our product, and we think, well, the one big advantage Just Eat has over all the companies you can mention is operational expertise, 15 years of know-how, a world-class platform, and lastly, and not to be underestimated, scale. You know, if you take some of the platforms here in London, if you take that local logistics player here in London, Deliveroo, you know, we'll be processing literally in 5 minutes on a Saturday night what they'd be processing in a month in terms of orders.
I think Just Eat is a great company. Fundamentally, it's a really good business. If you kind of work out the numbers and say this is kind of the market size, 90 billion euros, you know, this is what a player could kind of get. Once you get to scale, it's a very profitable business. It should be north of 30-40% operating margins. And so if you kind of work through the math, you know, this is an opportunity that can generate about 3.5 to 4 billion euros worth of profit. Those are big numbers.
The Silicon Valley continues to dominate the tech world, and despite growing numbers of unicorn, Europe has not yet created Google, Facebook or Twitter. But is being a unicorn all that it's hyped up to be?
If you look at the growth in unicorns, what's often happening is to get the billion valuation, you're actually compromising the actual terms and conditions they're raising that money at, which in real terms can be more meaningful to the entrepreneur, the team behind that business in the long term. So for me, I wouldn't necessarily focus so much on the valuation. It's more, what is the substance of that business, how much is it growing by, and what is it really changing, what market is it going to disrupt, if you like. Those are the real fundamental, because the valuation, if you do a great job, will go to where it needs to go to. So there's no rush to get to $1 billion. For me, it's kind of a nonsense.
I mean, this is a very virtuous economy. As you get smaller unicorns birthed, the people who work for them, they go off and build the next one. That one gets a little bit bigger. And, you know, just Silicon Valley, you know, in 1960s, 1950s was farmland. and it kind of birthed an entire tech economy. So all the unicorns used to sit in the valley. The same thing will happen to London. It will just be a matter of time.